the other thing I want to talk to you about, Manish, is also the PSU pack, and I'm going to, keep the banks out of that segment. Are you as bullish there as well? Or do you think there is that event risk of the election which could play sort of spoil sport in the kind of rally that one has seen in the entire pack?
On the contrary, I would believe post the election, the PSU pack is going to get massively re-rated. I mean, that's my personal view. From the point of view of the fact that if you look at the outlook on growth, that is pretty good for most of the PSUs, I would believe. If you look at the valuations, I mean, they are very, very reasonable. So OMC is maybe trading at a 5 to 6 PE, or let's say a 4 to 5% dividend yield. So be in the case of, let's say, power financiers. You name it, across the board, PSUs would have both growth and valuations on their side. And I think when you are looking to find value in such sort of markets, this is one pocket where, I don't think, you can ignore this pack as a whole for a great length of time. And from that point of view, monopolistic PSUs, so to speak, and including PSU banks, where I think valuations are far more conducive, I would believe that it's an overweight sector to be in, particularly positioning a portfolio even before the elections are out or maybe even after the elections are out.
Interesting. And I want to dig deeper into that. Other than the OMCs, what are the other pockets which are looking interesting? Because PSUs is such a large bucket.
So monopolistic PSU companies, you have the defense companies, you have the logistic companies, you have the power financiers, you have the oil marketing companies, you have the commodity companies. Whole lot of them. And all of them are trading at very, very reasonable valuations, I would believe. So if you believe commodities, this is going to be a dark horse going into the future, look around you and find the commodity company, particularly in the commodity space, and you will find great value. So it's not only about the earnings growth, but it is also about very decent valuations, also about the very lucrative dividend yield. And for how long can you ignore all these things?